The sell-off in Asia continues this morning. Let's get more on the markets from Juliana Roadley, market analyst at Commonwealth Bank, or rather Commonwealth Securities in Sydney. Juliana, good morning. Subtle factors behind the sell-off in the last few trading sessions. A major one is Obama and his plan to restrict bank activities. What do you make of the market reaction so far? Overdone, perhaps, an excuse for some correction?
Morning, Haslinda. Yes, we feel it is a bit of an overcorrection in the markets. You know, it might go through in its current form, but I think it still has a lot of work to be done. We know that the banks are going to be penalised in some form. The fact that they might come in and limit the size of some of these banks, maybe that's a good thing. Maybe it means that the markets will be more open around the globe, and we might see a bit of cash coming into the Australian market and also into the Canadian market, because these are the two strongest banking communities around the globe at the moment. We know that here in Australia we're very close to Asia, and that's where the growth story is as well. So hopefully we'll get a bit of money on the back of that as well. We've heard that the Tories, if they get in at the next election in the UK, that they might look at banking practices much the same as what Obama has put forward. This will be very interesting. It'll be interesting to see how everyone feels when they get to Davos on Wednesday and start talking about this bank reform and how that gathers legs or whether it doesn't. I think you'll have a lot of people talking about the changes to prop trading and how that's going to affect the ongoing markets, especially the exchange markets, the futures markets and the commodity markets, to see that there won't be such huge volumes going through the market, and a lot of the speculators will be pushed out of the market. So there's a lot of change to go through there. I think recently we've seen a big reduction in commodity prices as some of the larger funds have started to get out already. So I think it'll be smooth sailing from here, and we feel it is a strong buying opportunity at the moment.
You talked about those reforms. They could hamper growth for US financials, but could be positive for Asian banks, perhaps, correct?
Oh, yes, that's how we feel the play will go. The Asian banks into Australia, into New Zealand, also some of the other stronger banks around the globe. A lot of the banks that have a lot of responsibility about commodity prices as well and commodity demand. That's why you'd see the Canadian banks and maybe some of the South African banks going for a run as well. Some of the smaller banks in the Eurozone, if we start to see these reforms coming into play, you could see some of them raising their capital as well. I think you would see the US banks, especially the giants, looking at other ways that they can play this game. If they know that they can't get the trading done that they want under their current mechanisms, I think you'll see them cutting themselves into two, having a business bank and an investment bank, maybe looking at offshore listings as well, ways to get around the regulations that will currently be in play. So I think it's going to be an ongoing change, this obviously bank reform, and I think it's going to take a long while to come through in the markets. I don't think you'll see any reform coming through until maybe the end of 2011, 2012. So I think the sell-off that we're experiencing at the moment, especially in those majors in the US and on our market, is very strong and maybe overdone. If you have a look at the markets today, yes, the Australian market is lower, but the futures are positive for the Dow tonight. So that's a really positive sign for the market momentum into the second part of the trading session.
Lots of volatility so far. VIX at a 2-month high. Will volatility persist over the next few months?
I think you'll see a fair bit of volatility as we start to see what's going on with the Chinese problem or the Chinese situation, whether we're going to see a lot of stimulus being pulled out there. I don't think the Chinese economy will overheat. You've got strong government regulation. They can go to certain banks and say, sorry, you're not lending for the next 2 weeks. They can say to others, we feel there needs to be more growth in this region, so here's the amount of money you can lend. They can play like a puppet, pulling the strings, moving money around their economy and helping drive growth. We feel that this is going to be very good for the markets. We also feel that we're going to see some very good uptick in the markets because of this, and we feel that this is the play that you should be moving into.
And in terms of sectors, what do you like?
Well, in the Australian market, we feel that with the current sell-off, there's still a fair bit of ground to grow in the mining sector. You can see that because of all the export data that we've received over the last few days and the expectations for what's going to happen in China this year. You know, just over the last few days, we've seen expectations from PetroChina for crude imports to rise by 15%. Well, we're going to gain off the back of that. You've also got Price Waterhouse expecting that China will be the largest economy by 2020. 2020. You've got Goldman Sachs coming out and saying, forget about 2011. We feel 2010 is going to be the year where China is going to surpass the growth in Japan, and it's going to become the second largest trading network. So you've got expectations of more pipelines being built, uranium mines being built, a lot of money going into infrastructure. They're looking at clearing up their roads, their factories, and also their public transport network, which is going to grow a lot of demand in the country for goods. So we're expecting that the mining sector here in Australia and infrastructure space and also the service providers can gain off the back of this. Within China itself, look at the education plays. There's a lot of people with a lot more money. Disposable income in the last year in 2009 up by 8.8%. These up-and-coming people in China want to educate themselves, so there's going to be a lot of growth there. And then, of course, an ageing population. So you'd want to be buying into anything that has to do with retirement spending, retirement villages and healthcare, because these are going to be the growth areas in the next few years.
Since we're in China, Juliana, what about the yuan? With the economy growing so fast, is appreciation looking more likely now?
Oh yes, I think it is looking more likely. If you look back to this time last year, this is when we were all talking about the appreciation of the yuan again, and everyone was trying to put that heavy finger on the Chinese government and saying, look, please get out there, lift your currency. We need it to be of higher value so that it can work in the global economy and the global space. I think it is going to be something that's going to be spoken about at Davos this week. For the Australian markets, though, everyone's saying, oh, should we be worried about it? But if they increase the value of the yuan, it increases the purchasing power of many of their commodity buyers. And so, if anything, that's going to boost the Australian economy and the Australian dollar. So it works in our favour if they do.